welcome to Pursuing Knowledge, brought to you by Pursuit Wealth Group. My name is Brittany Drish, and joining me here today is Crystal Weiss, a wealth advisor here at Pursuit. And today we're going to be talking about retirement plans. So when you are considering retirement, I think a lot of people tend to just focus on market volatility and how that will affect their plan. But there are a lot of other factors, as we know, that can definitely affect someone's retirement plan. One of them being longevity. You know, people are living a lot longer now than they have in the past, so they need to fund a lot more years of retirement. So Crystal, if you kind of want to start with that and go into other factors that can affect a plan.
Yeah, so, longevity definitely is something that we plan for here at Pursuit. People are living a lot longer. Medicine is a lot more advanced than it used to be. So we do our retirement plans, we run them to age 95 when, typically life expectancy for a male or female is in their mid 80s.
Right. And then I know something that does come up a lot is sequence risk. So when you are drawing those funds, depending on where the market is, can you speak to that?
Yeah, so we have, kind of different buckets of money where we're pulling dollars from for our retirees. We have money that is safely allocated for your distributions that you're going to take over, a 3-year period. And we have different buckets from, 5-year, 7-year, 10-year money where depending on what the market is doing, we're replenishing those buckets based on if the market's really high, we'll take some of those gains and replenish some of the, 3-year or 5-year money. Or, hey, when the market's not doing so well, we don't have to pull from stocks because we already have buckets of money and, the lower risk that we're pulling from and don't have to sell stocks when they're down.
Yeah, and I think some of the other risks that you kind of spoke to in that were income risk. So you're losing that steady income that you once had. You're going to be starting Social Security, figuring out which buckets to take from. And with that comes, the risk of taxes increasing, right?
Yeah. So we, don't know what taxes are going to be in retirement. So, we've talked about this in a couple of videos where we'll do some Roth conversions, pull from non-qualified accounts, pay taxes today, convert them to a Roth and have tax-free growth into the future. So, there's a lot of different hedges that we'll do from a tax perspective as well that you need to consider, pre-retirement and during your retirement.
Yeah, and then with tax, there's also estate tax. So you've accumulated all of those funds, and there is a risk there as well.
Yeah. So when we go through the financial plan, we'll say, hey, maybe in your 70s, 80s, 90s, you may, have an estate tax, that we will be looking at to say, how can we, decrease this over time and kind of get that money out of your estate to decrease that tax liability in the future for your heirs.
Yeah, and then I think something that all viewers or listeners can definitely, they've been feeling the effects of is inflation risk. The price of everything is steadily going up, so that definitely would have an effect on your plan.
Yeah, absolutely. So we run our plans with inflation at 2.5% on your expenses, and then health inflation, we use a 5% inflation amount, and we adjust that all the way to age 95. So hey, if we can hedge some inflation risk in the future and say, hey, what numbers should we be using to make sure that your lifestyle doesn't change in retirement? Those are the numbers that we'll kind of factor in and, use those in the financial plan.
Awesome. Definitely great things that you can help take the burden or the stress off of your clients when they see their plan and you've already taken into account all of those factors.
Right. Yeah. So all these different risks, we account for all of them. There's some things that you can control, your spending, but outside of that, there's ways that we can hedge some of these risks in your retirement plan, and we want to take advantage of that.
Awesome. Thank you so much for your insight today, Crystal, and thank you for watching. We will see you next time on Pursuing Knowledge.